Hi there, good morning. I'm Dean Heskin, President and CEO of Swiss America Trading, and thank you for tuning in to our most recent episode of our podcast entitled The Secret War on Cash. And if you have not subscribed to our YouTube channel and this podcast, please do so. And also leave us some comments from time to time. We'd love to hear some of your feedback on some of the things going on in your personal situation, albeit your grocery bill or what's happening in your investment portfolio. Some of the things that have just become all too real of issues for American households and families out there. I have with me today guest Dustin Anderson. He's been with us before, and I brought him in because we're going to be looking or talking a little bit more about the gold market and gold prices. Good morning to you, Dustin. How are you today?
I'm doing well. How about you?
Doing great. Thank you. Thanks for being back with us here again. And let's dive right into it. I know when you were with us last, we were also talking about some of the things that have been happening in the gold market. And I know for those of you tuning in, Dustin, his capacity with Swiss America is he is involved day in and day out with watching where prices are doing, watching what a product is available, and making sure that everything is covered, if you will. So suffices to say, I would venture to guess, and I already know the answer to this, Dustin, but you have been quite busy in 2024 because gold prices have been booming. So that being said, one of the things that we've talked about in previous podcasts with gold prices moving is what's causing it to move. And one factor, a pretty significant factor, has been central banks. They have been purchasing up gold at a record rate now for quite some time. In this first article we're looking at here, so we hear, and those tuning in, we've talked about these articles, how central banks are purchasing gold. And as the title here says, to offset their own monetary destruction. So tell us a little bit more about, we know they're buying it because it's all public. They're doing it to offset their own monetary destruction. What is that? What does that look like, Dustin?
Yeah, I mean, for me, it's a blatant case of you follow what they do, not what they say. Because on the surface, they want to paint a picture that everything's fine and all their projections as far as what to expect and why their balance sheets are strong. And, they don't really want to talk about the fact that on their balance sheet is just a ticking time bomb of all this bad debt that they're using as collateral for more loans. And at the end of the day, when you have all this monetary expansion to cover their sort of accumulated deficits, it's sort of normal for the investor to go out and seek protection with gold, which has for centuries always acted as an alternative to fiduciary money and offers low volatility, a hedge against currency debasement. That's what these central banks are doing. They're sitting on all these. A lot of times, what they'll do in order to stabilize their own currencies is they will buy bonds from other countries. And when you have just on average government bonds over the past 5 years, the value of those have dropped almost 7%. So what these central banks do to face when facing latent losses from slumps of this nature, I guess the best way to strengthen the central bank's balance sheet, thereby diversifying and reducing exposure to all those fiat currencies, I guess as J.P. Morgan famously stated many, many years ago, gold is money and everything else is credit. So that's why these central banks are doing just that. So you have to follow what they're doing, not what they're saying.
Sure. Well, as I went through this article, it's a very good article for those of you tuning in. Click on that link. It's something definitely worth a read, and not a long read, but a good read. And you just look at all of the different factors contributing to why they're doing this. And what I really liked about this article, and I'll read it at the very end, and this is for everyone tuning in. It says, in an era of high correlation between assets and perpetual monetary destruction, which is what we're living in right now, incidentally, gold serves as a low volatility, low correlation, and strong long-term return addition to any prudent portfolio. And I got to tell you this, and in today's day and age, a prudent portfolio is a great portfolio. Having yourself balanced and diversified in this time of volatility you are not, you're playing with fire, I guess, by not
Sure.
having that. And again, like they say, the reasons that they list here are all very concrete, very solid, and something that, each of us are swimming in each day, if you will. And
Sure.
that goes, so let's look at this next headline here. And this is another topic that we've been talking about quite a bit. How gold keeps hitting fresh record highs, and here's what could lift it closer to 3,000. And we've had a ton of different. This particular article is from CBS Market Watch, but we've had a ton of different authors, websites, public news publications that have been talking about gold prices hitting 3,000 an ounce. And we started where a lot of this started coming out was at the end of 2023, when gold was knocking on the door of 2,000 an ounce. And just over the course of the last in less than 3 weeks, actually, gold prices have hit 3 new record highs. And so this price movement is real. Gold prices are moving. And that being said, I mean, what are the factors that you see that are driving this market right now? And is it something that we could expect is going to continue on into the future?
Yeah, absolutely. And the reason I feel so confident in saying that is you look at, well, let's jump back to one of the reasons that gold prices are going to continue to rise is central banks are looking to continue to further diversify their balance sheets. China themselves, and this isn't even talking about a full de-dollarization that you hear about in the news, but they're right now China's sitting on 50%, I think, of their balance sheet is just tied up in U.S. Treasuries. Currently, I think it's almost 4.6% of their balance sheet publicly that they publicly report is tied up into physical gold. And they are looking to triple that, bring it up to almost 15% over these coming years. So just that move alone is obviously going to have a good impact, I think, on the upward price of gold. But, not just central bank buying, but then you take a look at just the economic data here in the United States, you look at the weakness in the US dollar, those factors are going to continue to push gold upward as well. I know recently here, I think this was just last week, US manufacturing activity, the ISM, Institute for Supply Management, their manufacturing index just dropped a couple points down from like 48.5 down to just over 46.5. It was 46.7, 8, something like that. But my point is that was the 4th straight month downwards to an 8-month low. And then you have, coupled in the fact that Americans who have recently applied for unemployment benefits, I mean, that's climbed a nearly 1-year high recently, just climbed by 14,000 additional people applying for unemployment. So it sort of goes in the face of what going into an election year. I know the current administration is looking to get reelected, so they have a tendency to make things a little bit more rosy as far as economic data goes, but that's not a rosy picture. So there's all this talk of what's going to happen with the dollar. Is the Fed going to, are they going to cut rates? Are they not going to cut rates? But when you delve into that article a little bit more, the most mind-blowing thing, just to really show you the people that are running this ship, how they really don't. This is uncharted territory. They don't really know what to expect. They pressed Jerome Powell, Fed chairman, a little bit, as far as, are we going to get any rate cuts here now or by the end of the year? And I think his exact quote was, he said, Powell said he could imagine, quote, a scenario where there could be everywhere from 0 cuts to possibly several cuts. And it's like, okay, can we get a straight? Does anyone know what's going on here? Or are we just going to kind of wing it and hope for the best?
That's like saying it's either going to be really, really good or it may be really, really bad.
Yeah,
Not sure.
and they're just looking to cover their own rears because that statement is that what he said is a very true statement, but it tells us nothing. And the only thing it does, it allows some CYA on their part. So that's why, again, you can't listen to what these guys are saying. You really have to pay attention to what they're doing.
Well, and not to correct you, but you can't say the word rears on this podcast. This is a family podcast.
Okay, that'll too racy. Okay,
we use tuchus on this podcast, so you need to cover their tuchus.
Well, thankfully you didn't. Thankfully we weren't recording about 30 seconds prior to the beginning of this podcast, because I'll let all the listeners know I managed to spill an entire cup of water in my lap just before we went live. So it's that's something that you definitely don't want to do what I did there, as far as do as I do, not what I
So
say. So
you're saying you said something worse than rear end took us, maybe,
I will
perhaps.
leave that to the viewers' imaginations. But yes, we're live here, so we roll with it.
Well, listen, before we wrap this up, for those tuning in, at Swiss America, we deal in every and all forms of physical gold, physical metal. And as we've been talking about here, the price of gold has been climbing dramatically over the course of this year. And again, in the last less than 3 weeks, it's reached three different new highs. And part of the significance, again, we deal in ingots, bars, any form of gold bullion, Krugerrands, American Eagles. We deal in pre 1933 dated gold and silver coins, silver American Eagles, platinum, and you name it. But one thing that, when we haven't talked about this in our podcast before, that, and this is pretty, in the 32 years that I've been in this business, this is not altogether, what would you call it, something that's not typical in our marketplace. The fact that, and I'll have you kind of elaborate on this just for a moment, Dustin, as gold prices have moved up so dramatically, there, especially in some of the what have been traditionally or historically the best performing types of gold in our marketplace, which is the pre 1933 dated coins and things of that nature. And the reason they perform better, because they have a value that's derived from its metal, and then they have a value that's derived from some form of scarcity in relation to the price of gold. And that will vary depending upon the product. But what we're seeing right now, and this is where a lot of clients have been very aggressively and rightfully so, taking advantage of this opportunity. When gold prices move like they do, and that's the focus, because again, you have a duality of value there. You have some form of scarcity and condition value, and then you have the metal value. Well, as the metal values moved up so quickly, the scarcity and the like, that quality value, the premiums on that have not moved up by as much yet. And that's opens up the door, and has opened up the door for a tremendous buying opportunity for those people who are thinking about getting into gold, not just as it relates to a preservation tool or something to protect or hedge themselves, but also as an investment. So is there anything that you can kind of share about that, Dustin, or kind of elaborate on that?
Sure. Yeah, I'm happy to do so. And what you said is true. Governments mint bullion products by the millions of ounces, year after year after year after year. And when you look at products that have a fixed supply that they're not minting anymore, and we're not even talking like some high-end collectible where there's only 3 known to exist, or even 100 known to exist. We're talking just like you had mentioned, pre-1933 gold coins that they have stopped minting, that traditionally follow the price of gold, but even more traditionally have sort of a premium above and beyond just their metal content, because there is that fixed supply. And now there's this, I would call it almost a rare opportunity, if you will, of coins that where premiums on some of the older stuff are almost right in line, at historic lows in comparison to their bullion counterparts. So, for a lot of investors, and for us, it doesn't really matter which way a client goes. The advantage to us is we're really more of a brokerage firm. So we've got access to it all, whether it's bars or coins, gold, silver. What we try and do for everyone here is take more of a comprehensive approach, look at our clients' goals, look at their situation, look at what they're trying to achieve, and then make some recommendations based on that. So when we have clients who maybe they're looking at this from a defensive standpoint, but maybe they would like to see a little bit of additional growth. Not that they're looking to get rich overnight or anything like that, but just, maybe take advantage of some opportunities that are in the market. Pre-33 stuff at historic premium, with premiums at historic lows right now, it does really offer that classic double play that we've discussed in years past. So you've got not only the gold content, but you also have that fixed supply. So it does have some very good opportunities, safe opportunities to maybe keep up a little bit more, and then above and beyond just regular inflation with some good growth. So absolutely,
Sure.
yeah, anyone here at Swiss America, if you give us a call, any of our brokers, they would be able to maybe present some different options for you, get to learn, because there's no one size fits all for anyone. So they'd be able to take a look at your situation and answer any questions that you have, and at least get you pointed in the right direction. We don't charge for any advice or anything like that. So there's no such thing as a stupid question. Whatever questions you have, let us know, because we really are happy to get those answered for you, and we're passionate about what we do.
Well, and for those of you tuning in, the best first step that anyone could take, as we mentioned before, is contact our office if you haven't already, or even if you have already. If you want to get some specific questions answered, or you'd like some more information, either print or digital or electronic information sent to you, contact us at our toll-free number, 1-800-289-2646, or you can visit us online at www.swissamerica, SWISS, America, all one word, .com, and we would be more than happy to get that to you. And the time to do so is now. Again, gold price is sitting near those $2,500 levels, and that's just the bullion price, not the double play type price or the product that the double play Dustin just referred to. But time is now, especially when you look at gold prices. And incidentally, we've had a lot of talk, and a lot of people suggest that they're going to hit 3,000, and there have been many others that are saying it's even going to go higher. The point is, get your assets diversified, excuse me, your portfolio diversified, and take advantage not only of the protection, but also some of the profit and growth as it best fits your investment needs. So thanks for joining us here today, Dustin, and look forward to having you on sometime here again soon. Thanks to all of you for tuning in. Again, as I mentioned at the onset, if you're not subscribed to this podcast, we'd love for you to do so, as we'll be bringing you more information like this in the days, weeks, and months ahead. Thank you so much, and have a great rest of your day.
We'll see you, Dean. Thanks.